Good morning and welcome to the market forecast for Wednesday, May the 26th. I'm John Hoagland. Thanks for trusting me with your time. We got some interesting things always going on in the markets, always opportunities. We're just going to always be looking for accurate context, looking for good risk management, and always trying to remain patient in the markets. Good morning if you're already in the markets. Hopefully, you've got things going your way. We've got some markets at some important inflection levels. We're going to look at those on the charts very shortly here. As always, noticing the important economic numbers due out this morning. 9 o'clock a.m., Fed member Quartles is speaking at 9 o'clock this morning. He's also speaking later on this afternoon. Other than that, as far as economic numbers are concerned, the 9:30 a.m. Central EIA Petroleum Status Report due out. Nothing really impactful due from that. The API was maybe a small change, and we're looking for small change in the EIA numbers this morning. Again, we'll take another look at that. As far as news is concerned, the U.S. equity futures are set to open a little bit higher, although kind of still range bound as we await important eco numbers tomorrow and the GDP numbers. We are also coming up to a 3-day weekend, the Memorial Day weekend. So, this weekend, make sure you say a prayer of thanks for all of those who gave their supreme sacrifice so that we can live the freedoms that we live. Bitcoin fans are going to be happy. Bitcoin was up above 40,000 last night, kind of waffling around that level. There's a big hubbub in Congress this afternoon, or at least on Capitol Hill. The CEOs of the largest banks are testifying before the Senate Banking Committee today, later on. This is the first time since 2008 that all of them have assembled in the houses of Congress to speak. We're talking about the Bank of America, J.P. Morgan Chase, Goldman Sachs, Citigroup, Morgan Stanley, Wells Fargo, Bank of America, if I hadn't already say that one, all of those to be speaking in front of Congress today. So that might be interesting. As always, we're always thinking about headline risks, things that are going to happen throughout the day that are, that we can't foresee. So make sure you're always using your stops. Always use stops. Protect yourself from headline risks. As always, I'll ask that you like, share, comment, question, feedback, and heckling are always welcome. Subscribe to our YouTube channel so you can get notified when we do go live. A brief look this morning, a few minutes ago, at the VIX, the dollar index, and the 10-year yield. VIX down a couple of percent this morning, down at 1792 as the equities continue to rotate higher. Dollar index still just down below that 90 level at 89.84. And the 10-year yield still continuing to slide slightly a little bit at 1.56%. We got the 10-year on an up move yesterday, so it's going to be another interesting trading day for us today. As far as the group coaching today, I've had to cancel that. I've got to leave the markets for the day today and take care of some personal business. Personal performance coaching meetings are also canceled. I'm going to be reassigning any one-on-ones I'm having with my personal coaching family to later this week. I want to make sure and get everybody taken care of, and we will look forward to being back. I will be back tomorrow morning for the market forecast. Just got to step away for the day and take care of some business. So, as always, I always like to say good morning to everybody. My brother Rick, good to see you this morning, as always. Theo, good to see you. Felix, the infamous Felix Escobar here. Brian, Richie, Cesar, Endelson, good morning. James, good morning. Laura, good morning. Vince, good morning. George Adams, good morning. Keith, good morning. Tim G. Greg, feels like a good day is on the way. Always good to be positive. Keep that internal dialogue positive as well. I know as well as anybody how brutal the internal dialogue that tells us we may be not good enough, smart enough, or handsome enough to be a successful futures trader. But trust me, you all are. Josiah, good morning. Colin, John, Jim, JD, the Dancing Bear, always a pleasure to see you here in the morning, JD. Mr. Shine's Mystery Channel, Tone, Tactic AN number 1. Good to see you, Shady Trader. Oh, good to see you, my nephew. Brad Generous. Good morning, everyone. Mike Magallanes, the chef, is here. Andre, Mr. Shine's Mystery Channel. Murph, good morning. What a great day today. Love the positivity that I get from everybody. It just really keeps me on the happy side. Trying to get rid of the poison, Vince is saying, but it's hard. Was up 650 on gold this morning, moved my stop up to plus 20, came back, stopped me out. $650 turned into 20. All right, Vince. When we do start finding that we're getting pretty good at finding good trade locations, it then seems to be, it comes over us that every trade we take, we're going to be viewing as a home run. In that case, I start to recommend, choosing a good risk-reward ratio for taking your trades. If the risk was $100 and you get 600 in it, that's 6-to-1 reward over risk. We start taking those trades and we start maintaining and building that account over time, then we're going to have the opportunity to buy the time to get better and better at recognizing when some of those opportunities would be better. So it is all part of the game. Every one of us in this room, everyone who's traded, has had the same thing happen where you've got a big winner on, and it just kind of goes away. It's very difficult to do. You can trail a stop, but that is an art form on itself. But we'll be talking, Vince, about that more and more as time goes on. Very happy to have you in the family. So we're going to take a look at the charts here. Let me get things a little bit set up. It appears that I have stable charts this morning, which is always a positive. And we're going to take a look at what we're seeing. I know the crude oil has just opened up. Good morning, Keith. Rick, you win the prize. Yup. Fanny and Frederico, good morning. So let's jump into the charts as always. Just going from left to right, in no particular order whatsoever, the crude oil daily chart. Good morning, Rob. All right, so the API announced a 439,000 barrel draw in crude stocks. The EIA at 9:30 is expecting an approximate 1 million barrel draw. Not expecting this to be I'm not expecting this to really be an impactful one unless the EIA number comes out drastically different than expected. Again, that's at 9:30 Central this morning. Crude oil traders well aware of that. Our weekly kickoff high, 65.50, now seemingly kind of being a bit supportive. We get a little bit below that this morning. Was looking at it earlier as an inside extended trading hour day. We've taken a look down below it. Yesterday it was supportive in the daily chart. We can see it here. We're still relatively holding upside structure here. We had a pretty deep move down below this trend line, pretty close to our weekly kickoff low and last week's low. But as long as we can find participation, if there's business to do above 65.50, I expect it to remain up there. If we do see a rejection of it, there's the trend line down below, and then there's plenty of space down below for crude oil to continue to come off this recent high. Take a look at the 30-minute. We just kind of look at volume a little bit here. Volume was a little bit off yesterday, and we did add 3,100 in open interest. So there was some buying coming into the market above this important inflection level yesterday. If that buying was longer, stronger money, they may start to protect that level if that it was indeed longer, stronger buyers. If not, they may let this thing come back and look to buy it at cheaper levels. Here's the 30-minute chart. Okay, Friday closed above. Monday was, this was Monday, closed above. Tuesday closed above this important inflection level, and now it's being tested just below that level. So we have mixed to maybe some short overnight inventory, some shorter time frame day traders holding shorts, looking for continuation or a rejection above this important inflection level and a reacceptance below, which could bring price lower. There's plenty of visuals and weak structure down below the marketplace. We have a gap all the way down here. We have naked points of control in a couple of spots down here for the market to kind of look for targets to pull back to. Again, 65.50 pivotal. If we can't continue to bring in business below it, we may find more business above it. We have some shorts. Overnight shorts may take this market back towards settlement, but in large part, we do not have a gap. We are at an important inflection level. If this becomes magnetic, be careful because we may be starting to think long above, short below. If it kind of spans that level, that's going to cut us up a little bit. So we do have our challenges set out for us in crude oil today. Just looking for some sort of rejection of higher price above this level or an acceptance above that level could push us higher. We have 2 days basically trading above this important inflection level where time does mark acceptance, but we're really missing one piece of that. And where's the mojo? Where's the momentum? Where are the buyers pushing price higher? We've not seen them yet. Take a look now into the E-mini S&Ps. Adding 23,000 in open interest in the preliminary, kind of holding support at last week's high, also. We do have an inside extended trading hour range between yesterday and the overnight from last night. That's going to probably tell us we're going to try and remain patient here this morning. The market is anticipating the GDP numbers tomorrow. The most important number of the week. We also know that we have a 3-day weekend coming up with the Memorial Day holiday on Monday. So we're going to see a lot of traders evening up and getting themselves hedged for a 3-day long weekend where they're not going to be able to get out of the markets or into the markets. So they're going to set themselves up to protect what they have. Short time frame upside structure remains. We're putting in higher lows. We're putting in higher highs. Is the momentum starting to continue to the upside? Well, without any bad news, we all know that the equities tend to grind higher over time. The buy-side opportunities in stocks are where most people are trading stocks is from the long side. So it gives it a kind of an upside tilt, if you will. Without bad news, I'll look for this market to range for the better part of today, waiting for the numbers tomorrow. We'll see what things look like tomorrow morning on the market forecast. Taking a look at the 30-minute chart. Okay, here's last week's range high. Drove through it, accepted on Monday, held above it on Tuesday. Settlement, point of control, overnight low, and value low are all very tightly packed together. To me, this looks like a very target-rich environment, and I would be really trying to stay patient to see if I have an opportunity at this level. You can see point of control right here, settlement right here, which is 41.8550. Last week's low and value low from yesterday. I call this a target-rich environment. If we get the opportunity for an execution there, I would be ready for it. We do have some overnight longs. We've gotten a little bit rangy overnight here. Did our overnight longs kind of reconcile those longs coming into the open this morning? It is entirely possible. Does not mean that we may not come back down and recheck this level. Oh, and don't forget our overnight low is relatively close to this area as well. So this is such a target-rich environment. I would be sitting here waiting patiently to see if I have an opportunity for an execution here. Overnight mildly long inside range and value. Stay patient. If we get the opportunity down here in this target-rich environment, it may pan out to be a wonderful opportunity. The best part about it, when we see things packed together like this, value low, last week's range high, settlement, point of control from yesterday, we can limit our risk. Everything I do, I think about the risk first. If the risk is too great to a point of invalidation, then I'm either going to be patient and wait for better trade location, or I may miss the whole thing altogether, but it's okay. There will be more opportunities like this. All right, so take a look now into the NASDAQ. I've got the 30 up here. We're up against weekly kickoff high. Not quite there yet in the S&Ps, but we can see that we've got short time frame structure, really still kind of remaining to the upside. This is, there we go. Sometimes the trend lines get a little bit askew on these charts. So we're still holding upside structure, even in short time frame upside structure after a decent pullback. We're above last week's range high. We added kind of a meager 1,000 contracts up against an important inflection level on higher volume, however, so that looks good. We have an inside extended trading hour day so far, again, with a lot of folks expecting GDP tomorrow and a 3-day weekend. I think a lot of the activity is going to be evening up and hedging for the long weekend, especially after the numbers tomorrow. I'm looking forward to seeing how tomorrow plays out. In the NASDAQ, we do have an important inflection level that is in play today. That's the weekly kickoff high. It was resistant yesterday. What do we got going on here? And let's look into the 30-minute chart. Okay, do we have overnight longs up against an important inflection level? It would appear that that is the case. Settlement is down here with 13,656 quarter. And, we're just kind of, we got some longs here. My concern for that is, though, we've been arranging and consolidating for long enough in the European session for a lot of these longs to have reconciled. So if we get the opportunity up here near weekly kickoff highs, certainly a sweet opportunity again. Why? Because we can limit risk. If we continue to push lower into range and into value, that'll put me patient to look for a possible move to the low of value before looking for opportunities. If we become directional, I do not want to step in front of either directional activity. If I'm not in it, I'll find a way in, or I'll be patient and wait for the next opportunity. Gold yesterday, boy, I stuck my foot in my mouth yesterday. It was gold yesterday in the morning until after the forecast looked like it was really just going to stay range bound and very magnetic towards our previous weekly kickoff high here. And that was at 1882. I kind of said it was off my radar, but as I was finishing the forecast and taking a look through my charts, watching the equity open, I said, there's something going on here in gold, and it certainly did prove to be a truth. We took out, we left the magnetic 1882 level. We took out the last week's high, and we added, we lost 10,000 in open interest, on higher volume. What does that tell us? It tells us some shorts. Some probably recent shorter time frame shorts decided, this isn't working out, let's get out, and they pushed the market higher, reducing open interest on an up move. Take a look at the 30-minute chart. So we've opened with a gap. We have overnight longs. It looks like there's a reconciliation of those overnight longs coming to here, but if we can't close the gap, there's going to be a turnaround, and there's going to be plenty of space in the daily chart all the way up to our weekly kickoff high here at 1934. We've got a little bit of work to do before that. If we unravel our overnight longs, That's going to take some selling power away from the marketplace. If we can't close the gap and we put in some sort of structure to lean on here, then we can push the market higher. The thing about that is the value high from yesterday is right at the high of the session. If we start to show signs of acceptance back inside yesterday's area of value, there's the probability that says if we reaccept in yesterday's area of value after opening outside of the range, there's a probability that at some point in the session we may see price move all the way back down to the low of value. So our really important inflection level is going to be high of value from yesterday and settlement and our overnight low. Very tightly packed, important inflection level, high target area. Pay attention to what goes on there. If we dip into range from value high from yesterday and we reject it, that might be very important information, because if we reject value from yesterday after unraveling the overnight longs, taking that selling power out of the marketplace, it could bring in a stronger move to the upside. Acceptance inside value pushes us more towards the low of value at some point in the session. All right. Take a look now into the euro, where the euro has had a pretty big run as far as increasing open interest. There was quite a bit of open interest building in this area here. We added another 6,300 in open interest in our breakout above this kind of rangy area above the last week's high and basically straight to weekly kickoff high. Weekly kickoff high resistant again last night, but we're still holding upside structure. The volume was pretty good yesterday. I'm thinking that this market is showing signs of continued healthy upside auction. What does the 30-minute look like for us? Settlements all the way up here, 122.60 and a half ticks. Our move up to our weekly kickoff high in the overnight last night, the night before last, unable to take it out. Is it telling us that we've got a few too longs in this market? It may just be what this market needs is a pullback of this magnitude. I don't think that we have a gap here, but there's lots of structure to look for opportunities in lower levels. If I'm going to be a buyer, I'd rather buy low than buy high. And with the structure we have, I say, we're still looking pretty good as far as upside opportunities. We've continued to push to the downside. We've got plenty of overnight shorts here. This point of control and this point of control would be obvious visual targets for a downside move. If we do get down to those levels, I'm not going to just jump into longs there. I'm going to make the market give me some sort of structure to lean on before looking for longs. Again, it's if we get down to these levels. The market is, showing some momentum to the downside. If the momentum starts to fall off, our whole moving averages start to hold below price, then I'd start to be worried that if I were short in the hole here, I might start to think about taking this market back up to settlement. But the fact that the shorts are here, the fact that we may be a little bit too long to continue to rally, pullback would be a necessary and healthy upside auction function. Markets can't just continually go one direction and then just continue to go. Eventually, the short time frame, medium time frame gets too long. The longer time frame holds pat, and there has to be some sort of an adjustment. So this is seemingly what we might have going right here. We're starting to see the 9-session whole moving average holding below price. This could be the first sign of, hey, maybe we've gotten a little bit too short in the hole here. Maybe we need to get rid of some of those shorts and see this move back to the upside. The 10-year now, before we get down to business. Little upside breakout attracts some decent volume, nothing tremendous. Only added 20,000 in open interest as rates continue to kind of slip lower. The Fed stays dovish. We're seeing some continuation of higher pricing here in the 10-year. Is there space? Of course there's space. We've got a weekly kickoff high that's been up there since, I don't remember when, 133 and 1730 seconds. If the momentum continues to the upside, that's going to be a pretty good visual termination of a initial breakout or breakout market state break. We broke a short time frame market state yesterday in breaking out above last week's high. We've got some momentum to the upside, higher lows, higher highs. If that remains, my next target would be up at that 133 and 75.30 seconds. Take a look at the 30-minute chart. So a little bit of a volatile opening this morning. We had some overnight shorts. London session, we took them all back up to settlement, which is 132 and 31.30 seconds. The market has no gap, no close, no overnight inventory, no runs, no hits, no runs batted in. We're right where we left off yesterday. If we do find acceptance inside yesterday's area of value, which so far we've rejected, that could bring us back down to point of control, our overnight low, or even value low. If we can reject yesterday's range and value relatively early this morning, I see a continuation of the upside move that we started yesterday. It's all in where we are right now. If we start to build business above, we're going to go that way. If we can't build business above, I think we're going to kind of hold this market in range and in value for the better part of the session today. All right. I hope that that's going to be helpful for everybody. I really enjoy the time that we get to spend together. I'm very, very sorry that I have to cancel the group coaching session that's usually on Wednesdays at 1 o'clock p.m. We'll be ready and raring to do it again next week. Hopefully it'll be a great session. Yeah, don't hold that venom, Vince. Take a walk, let it go. Look for the next opportunity, which has nothing to do with the last opportunity, the last trade, or the next trade. Sometimes a break even is a win, 100%. Yeah, Modesta's, at some point you've got to get paid. I had a coaching family member that was constantly trying to master trailing stops. He'd get a good trade on. He was a gold trader too. He would get a good trade on. It would go his way. It would go his way. He would follow it with stops. He'd eventually start to bring those stops a little bit too close, and he would never get out at a high. He would always get out on a pullback. And hopefully he's been. I haven't talked to him in a while. I know that he's still active and an active trader, but I'm going to probably touch base with him, see how things are going. At some point, you got to take a profit, right? Shady Trader, next week's session's 2 hours. Well, we'll have to see if I can get the time to do that. My brother Rick, I am delivering the prize later on today. Everybody, have a great trading day. I've got a little bit of yammering here. We got 15 seconds before the E-mini S&Ps and the NASDAQ open up. Take your deep breath. Humble, grateful, creative, patient, and all those other buzzwords for us today. Get out there and profit. Have a great trading day. I know Dan's going to be looking forward to seeing everybody on the market recap, and I will see you tomorrow morning again. Have a great day. Trade well.